Imagine you're driving home after work, and suddenly another car runs a red light and crashes into you. Your car is badly damaged. You're shaken, but at least you feel relieved knowing you have car insurance. But a few weeks later, you receive shocking news. Your claim isn't fully covered. You still owe thousands of dollars for repairs, rental cars, and medical bills. How is that possible when you've been paying your insurance premiums every single month? The truth is that car insurance companies don't always explain everything clearly when you buy a policy, and some of the most important details are buried deep in the fine print. In this video, we're going to reveal 7 things car insurance companies rarely explain to customers, but absolutely should. Understanding these could save you thousands of dollars and a lot of stress. Car insurance in the United States can feel confusing. There are dozens of terms, different coverage types, and policies that all seem similar but actually work very differently. Most people simply choose a plan, start paying the monthly premium, and assume they're fully protected. But many drivers only learn the truth after an accident happens. In this video, we'll explain how car insurance actually works, the hidden details many policies contain, and 7 things insurance companies don't always make clear to customers. This is purely educational content designed to help you better understand how the insurance system works in the United States. Before we get into the 7 hidden truths, let's quickly explain the basic idea behind car insurance. Car insurance is essentially a risk-sharing system. Drivers pay a premium, usually monthly or every 6 months, to an insurance company. In return, the insurer agrees to help cover certain financial costs if an accident or damage occurs. But several key terms determine how your policy actually works. First is the premium. This is the amount you pay regularly to keep your policy active. Next is the deductible. This is the amount you must pay out of pocket before insurance starts paying for damages. For example, if your deductible is $1,000 and your repair costs are $4,000, the insurance company may only cover the remaining $3,000. Another important term is coverage limit. This is the maximum amount your insurer will pay for a claim. Finally, there's a claim, which is the formal request you submit to your insurance company after an accident or loss. Understanding these basic terms is important because many surprises happen when drivers misunderstand how they work. Let's look at a simple example. Imagine a driver named Michael in Texas. Michael buys a cheap car insurance policy online because the monthly premium looks affordable. He chooses a high deductible to keep the price low. 6 months later, Michael accidentally hits a parked car in a parking lot. The total damage comes to $5,500. Michael files a claim expecting his insurance company to cover the costs. But here's what happens instead. His policy has a $2,500 deductible. That means Michael must pay the first $2,500 himself. His policy also has a coverage limit of $3,000 for property damage. So the insurance company only pays $3,000. That leaves Michael responsible for $2,500 out of pocket, even though he had insurance. Situations like this happen every day in the United States, and they highlight why understanding your policy details is so important. To better understand where problems can occur, let's walk through how the insurance process typically works. Step 1. Buying the policy. Drivers choose coverage levels, deductibles, and optional protections. Lower premiums often mean less coverage or higher deductibles. Step 2. Paying premiums. Once the policy is active, drivers must pay their premiums on time. Missing payments can cause policies to lapse, meaning you're no longer covered. Step 3. Filing a claim. If an accident happens, the policyholder contacts the insurance company and files a claim. This usually involves submitting photos, reports, and details of the incident. Step 4. Claim investigation. The insurance company assigns an adjuster. This person reviews the accident details, damage estimates, and policy coverage. Step 5. Settlement. If the claim is approved, the insurance company pays the amount covered under the policy terms. but the final payment depends heavily on deductibles, coverage limits, and exclusions written into the policy. Now let's talk about the 7 things many drivers don't realize about car insurance. 1. The cheapest policy often provides the least protection. Many drivers shop for insurance the same way they shop for products online, by looking for the lowest price. But cheaper policies often include higher deductibles, lower coverage limits, fewer protections. This can lead to large out-of-pocket costs after accidents. 2. Your credit score can affect your insurance price. In many U.S. states, insurance companies use credit-based insurance scores to help determine premiums. Drivers with lower credit scores may pay significantly higher rates, even if they have clean driving records. 3. Your policy may not cover rental cars. Many drivers assume their insurance automatically covers a rental car while their vehicle is being repaired. But rental reimbursement coverage is often optional, meaning it must be added separately. 4. Small claims can increase your premium. Even minor claims can lead to higher insurance premiums during policy renewal. Insurance companies consider claim history when calculating future rates. 5. Your car's value determines maximum payout. Insurance typically pays based on the actual cash value of your vehicle, not what you originally paid for it. This value decreases over time due to depreciation. So a car purchased for $30,000 may only be worth $18,000 a few years later. 6. Some situations are excluded. Certain situations may not be covered by standard policies. Common exclusions can include using the car for commercial rideshare services, intentional damage, driving without proper licensing. These exclusions are often buried deep in policy documents. 7. Loyalty doesn't always mean lower prices. Many drivers stay with the same insurance company for years, but insurers sometimes offer better rates to new customers than existing ones. That means long-term customers may actually be paying more than necessary. Many Americans make a few common mistakes when buying car insurance. One of the biggest mistakes is choosing the cheapest policy without understanding coverage details. Another mistake is selecting a deductible that's too high. While this lowers monthly premiums, it can create financial stress after an accident. Some drivers also forget to review their policy every year. Life changes, new vehicles, new locations, and different driving habits can all affect the type of coverage someone may need. While every driver's situation is different, there are a few educational tips that can help people better understand their insurance policies. First, always read the coverage limits and exclusions in your policy. Second, compare quotes from multiple insurance companies before choosing a plan. Third, make sure you understand your deductible amount and whether you could realistically afford it if an accident occurred. Finally, review your insurance coverage periodically to ensure it still matches your needs. These simple steps can help drivers better understand how their insurance works. Car insurance policies can appear simple at first, but the details matter a lot. Understanding terms like deductibles, coverage limits, and exclusions can make a major difference in how much protection you actually have. The key thing to remember is that insurance is designed to reduce financial risk, but it doesn't always cover every situation. Taking the time to understand your policy can help avoid expensive surprises later. If you found this explanation helpful and want more simple breakdowns of how insurance works in the United States, make sure to subscribe to the channel and let me know in the comments what's one insurance topic you've always found confusing. It might become the topic of our next video. Thank you.